Have you ever looked around and just wondered why some folks seem to effortlessly build wealth while others are out there working incredibly hard, day in and day out, but just never seem to get ahead? Yeah, it's a super frustrating reality for a lot of us. But hey, today we're going to fix that. Welcome to this explainer on mastering the mechanics of wealth. Let's get right into it. So why do some people build wealth while others just work hard? Look, the answer honestly isn't luck, and it definitely isn't magic. It's really all about understanding the underlying mechanics of how money actually works. Think of it like a system, a machine really, and if you consistently apply the right rules, that machine starts working for you. Today, we're demystifying these core financial concepts, the stuff schools, rarely ever teach us. Here is the blueprint for what we'll be covering. 1. How money actually works. 2. Financial forces and friction. 3. Investing and creating value. And 4. The power of consistent time. Okay, let's dive into this. Section 1. How money actually works. Trust and tools. First things first, we need to completely redefine what money actually is. Because money isn't wealth itself. Nope. It is literally just a tool that we use to exchange value. And the crazy part? It functions entirely on societal trust. I mean, think about it. Only about 8% of the world's currency even exists as physical cash. The rest is just digital agreements. A digital balance sitting on a screen has absolutely no real usefulness on its own. It only works because millions of us collectively agree that it means something. Understanding this is a real game changer. It shifts your whole mindset. Money is just a tool in your belt waiting to be put to work. Now, as you use this tool, you're going to encounter some friction. And the biggest one? Taxes. Taxes are basically the friction that funds our roads, our hospitals, schools, and emergency services. Whenever you earn income, buy products, or make a profit on an investment, the government collects this friction. And yeah, while absolutely nobody loves paying them, they do fund the essential public services we all use every single day. But here's the kicker. Understanding basic tax rules and strategic mitigation keeps more fuel in your wealth machine rather than just burning it off as totally unnecessary friction.
Speaking of moving money around, let's take a look at the actual gears of the system. Banks. Banks aren't just these giant, secure vaults where cash sits gathering dust. They're actually the engine of the economy. Here's how it works. A customer deposits money. The bank keeps a tiny fraction of it, and then they lend out the rest. It's called fractional reserve lending. They're effectively multiplying the money supply and earning the spread on the interest. Basically, they act as a super vital gear connecting the folks who have cash with the folks who need it, like to buy a home or start a new business.
All right, moving right along to Section 2, Financial Forces and Friction, the rules of the game.
Now, what's really interesting about this concept is that interest is a total double-edged sword. When you borrow money, interest increases what you owe, right? It acts as this massive, heavy headwind pushing against you. But when you save and invest, interest actually helps your money grow. It flips into a tailwind. The absolute key to wealth is making sure this mathematical force is consistently pushing you forward, not dragging you backward. So you might be thinking, well, what if I just hide my money under a mattress to keep it safe? Well, then you face a really insidious force, inflation. Let's put this into perspective. At a pretty standard 3% inflation rate, your purchasing power is literally cut in half in just 24 years. Half. Inflation means that everyday things, groceries, fuel, rent, they just consistently get more expensive over time. If your cash is just sitting idle, it's silently bleeding value. And that's exactly why simply saving money is not enough. You absolutely have to outpace inflation. And then, of course, there are the inevitable bumps in the road, recessions. We all know the feeling. Economies slow down, spending drops, businesses earn less, and unemployment might tick up. It's scary. But history proves that economies eventually recover. They literally always have. While recessions might slow the wealth machine down temporarily, the people who consistently prepare, by having an emergency fund and maintaining liquidity, they're the ones who weather the storm without panicking. Sometimes they even buy up assets at a steep discount. Let's shift gears a bit. Section 3. Investing and creating value. Fueling the machine. Think of your credit score as pure leverage. Maintaining a stellar financial reputation isn't just about, qualifying for a shiny new rewards card. It actually unlocks cheap debt. If you're leveraging loans to buy real estate or scale up a business, a top-tier credit score saves you a tremendous amount of financial friction. Lenders use it to estimate your reliability, so consistently paying those bills on time lowers your future borrowing costs dramatically. It is a foundational tool. Next up, we absolutely have to talk about investing. Remember how we said saving protects your money?
Well, investing is what actually makes it grow. The most common vehicles for this growth are things like stocks, bonds, mutual funds, and real estate. Now, yes, let's be real, every single one of these involves some level of risk. However, history shows us that consistently investing in these vehicles over a period of many years builds wealth infinitely faster than just leaving your cash unused. Patience and consistency here are way, way more important than trying to perfectly time or predict crazy market swings. And this next point brilliantly illustrates how income actually works. Because at the end of the day, income follows value. Basically, 50% of value comes from solving problems, 30% from having useful knowledge, and 20% from providing services. So, what does this mean for you? If you want to increase your income, you have to tackle larger, more complex problems for society. Businesses and professionals earn more simply by consistently upgrading their skills and becoming more valuable problem solvers. Which brings us to our final and most important point, Section 4, the power of consistent time, your greatest asset. Okay, we need to shatter a massive misconception right now. A lot of folks think money is their absolute greatest asset. It's not. I'll say it again. Money is not your greatest asset. Why? Because money can always be earned again. Time cannot. Time is literally the one single resource you can never, ever get back. The earlier you begin learning, investing, and improving your skills, the more of this completely irreplaceable asset you have consistently working in your favor. And why is time so important? Because time unlocks compound growth. There's this cool thing called the rule of 72. You just divide the number 72 by your interest rate, and it tells you exactly how many years it's going to take for your money to double. So the crucial point is, even seemingly small interest rates become unimaginably powerful over many years because your earnings start generating their own additional earnings. It's like a giant snowball rolling down a hill. But, and this is a big but, this math absolutely demands consistency. Starting early and consistently adding to your investments, that is exactly what turns math into millions. It all boils down to this. Small actions repeated consistently over many years often produce extraordinary results. Honestly, that is the entire secret to the mechanics of wealth. It's not about getting rich overnight. It's definitely not about finding some secret hidden loophole. Wealth is built through smart, continuous learning and patient, consistent execution. It's all about putting the systems in place, staying the course, and letting time do the heavy lifting for you. So as we wrap up, I want to leave you with a really profound shift in perspective. Instead of constantly asking yourself how to make more money, ask yourself this: what problem can I solve better than others? Because if you can answer that, the entire wealth machine turns in your favor. If you found this explainer helpful, please hit that like button, subscribe, and share this with someone who is taking control of their own financial mechanics. Keep consistently solving problems, and I'll see you in the next explainer.